Taher Badshah from Invesco joins in on the show right now. Taher, hi, morning. Good to have you on the show. Just wanted to understand what your market, construct is right now, in opinion, given the kind of recovery that we've seen from the verdict day lows and pretty much across the board, be it large caps, be it mid and small caps, or for that matter, PSUs in particular as well.
Yeah, hi, good morning. I agree. It's been a very smart recovery, and it uh, is on the back of the fact that we are still in a sweet spot as far as the overall economic picture is concerned. When you look at it, especially after the elections, what also probably now perhaps enthuses the market is that the market can probably broaden out. We've had policies which are a little more, which have been somewhat more attuned to the economic cycle, industrial cycle, investment cycle up until now over the last 2 odd years, and probably can we look forward to eventually consumption also on the other side picking up as a consequence of reasonably strong growth that we have seen on the industrial side and the investment side, which should percolate down to consumption at some point in time, and also probably from the point of view that at some stage. Uh, you know, Policy also may probably be supportive on the other side. So it's a nice combination to therefore have and look forward to, and that is what is keeping the market excitement up. Of course, we have a plethora of important events which we get into in the second half of the year, whether it is the outcome of the monsoons, policy on the budget, and of course certain global events as well, including the US elections. The whole thing about policy rates, interest rates, and how are we going to be navigating that over the next 6 odd months. So I think there's a fair bit of stuff which will keep the market a little more in check as well at certain levels. But I think by and large, still the overall picture looks reasonably certain, and that should keep the market in reasonably good spirits.
Why have markets retraced all the so-called budget day gains? I mean, look, valuations were a concern, and that's why markets fell. And if I look at the market right now, we are way above what the July 4th lows were, June
So
4th
clearly,
lows.
like as I said, I mean, we had that initial jitter around, the stability of the government as well as in terms of the continuity of policies. But once that was reestablished and market got the comfort that at least for now we don't really have any major disruption coming along the way. This is not only something that we can call for the next 4 5 years at a stretch. I mean, we'll have to see how it goes, but at least it's a good beginning. A couple of things which have happened post the elections with regard to formation of ministries, etc., has also been taken positively and been construed as a continuity signal. So I think that's what has brought the confidence back. Of course, flows have been supported alongside, and last but not the least, I think the global markets too have behaved quite well. We are starting to once again see the possibility of the Fed coming closer to a possible rate cut towards the end of the year or beginning next year.
And if that happens, what does that mean for flows?
I think they at least sustain. I would like to think. I mean, generally, emerging markets are typically more leveraged to the interest rate cycle, down cycle particularly, and I think. Therefore, if we start seeing the possibility of or a reasonable you know conviction that interest rates have topped out, uh, I think it should be beneficial as far as emerging market flows are concerned. And we've seen some pressure on emerging market flows, as you know, in the first few months of this calendar year. So I think that's something which can probably retrace. But it's flows are always difficult to call. They're a function of a number of things, and therefore, to that extent, we can only hope that, as in the past, it will signal better flows.
Taher, you just flagged off consumption. When you say consumption, do you mean FMCG or the larger pool?
So, parts of FMCG, there will be essentially what we are talking about is discretionary as well as staples at a level which is more value. So, value consumption is something which is lagged, whether be it in the form of value retail or it be in the form of autos for that matter. Further strengthens perhaps the two-wheeler cycle. certain pockets of the FMCG space as well would be beneficiaries. So I think, and even parts of consumer discretionary, white goods, etc., which are more in the affordable category. I think um, all that should probably strengthen on the back of let's say better policy outcomes of the monsoon, and also the fact that look, I mean, we've had a very prolonged 2.5 years of a subdued value consumption cycle, and rural incomes being not so strong. And I think even if we get a cyclical revival in that, we may not necessarily be able to argue for a structural upturn here, given household savings are still somewhat weaker compared to what it was pre-COVID, and much of the income pyramid has still not been able to increase disposable incomes to pre-COVID levels. But at least from a cyclical standpoint, if we can see a recovery out there, then probably over the next 12 to 18 months, we can see a twin engines of the investment cycle as well as the consumption cycle fire the economy.
Taher, everyone was of the view that there is bubble and trouble in small and mid cap stocks. But if I look at the small cap index, the index from June low is up 14%. 14% in 10 days, 10 trading days, not even 10 trading days, I think is a remarkable feat. Is it only pure power of liquidity?
No, I think we. I would say I would like to submit that we were not exactly in the camp which believed that mid and small caps were in trouble, and yeah, there were pockets of excitement, but this is not a rally that we have not seen in the past. We've seen occasions 5 years back. I recall 2017-18, where mid and small caps did exceedingly well, and perhaps not as strong as this time around, but it was still a very strong cycle. And this time around, it appears to be a lot more realistic. It is backed by fundamentals. It is backed by earnings, not as which wasn't the case probably in 2017-18. And that's why multiples on very subdued earnings inflated very quickly. And it was therefore a lot more flow driven. We saw multiples on the mid cap and small cap indices go up to as high as 40x. We are we have pockets of 40, 50, 60x in the broader market as such. But by and large, I mean, if you look at the aggregate index, not just, and I'm keeping the Nifty aside for the moment, even the mid and small cap indices are not nowhere close to those kind of peaks. And they're still, from a forward earnings looking perspective, are supported by a reasonably decent earnings expectation, at least. We'll see how the delivery goes. But so I would like to think that this is a more sustainable rally. It will have its corrections along the way, driven by sentiments, driven by flows, driven by a few other things which keep coming every now and then. But I think so long as the domestic economic momentum is reasonably strong, we know that mid and small caps are a lot more leveraged to that cycle. And therefore should continue on the path. Of course, we have to contain our enthusiasm in certain places. We have to, from a portfolio management perspective, from an investment standpoint. But I think we continue to remain constructive by and large. And therefore, I'm not surprised that the flows are maintained or flows are sustained after a brief pause.
So what is that one big portfolio change you plan to do after 4th of June election verdict? Because things would change.
So I wouldn't call out that as a date which triggered any changes in our portfolios. We have been prior to that date as well, starting to gradually, uh, uh, bring some balance into the portfolios. We know that there are certain pockets which are overextended. We like the space, but we don't necessarily like all the prices in many of them. So, uh, uh, we did go overweight probably further in the industrials and investment space, even in the early part of this year towards Jan and Feb of 2024. But even since then, we've seen a very strong rally, and it is important. It is incumbent upon us to make sure that we do the right rebalancing. So I think we have been anticipating some cyclical upturn in the value space, value consumption pockets. We've been building some small positions out there, taking the first initial steps, and then the way that's how our style is that we take some initial bets and then we wait for further evidence, confirmations through numbers, results, and various other things to further build conviction around it. So I think we've started that move quite prior to that. I think I would say that throughout the volatility of those 4 or 5 days of the week, election week, we just sat through doing nothing by and large. I mean, just kept the portfolios as they were, and I think post the elections, we believe that there will be that same trend. So as I said, I mean, the best part about the election outcome, if at all, is that we look forward to a more broad economic cycle. We'll see probably more participation out of different sectors. At one level, I would also think that there are sectors like global sectors, global-oriented sectors, whether it be tech or even to some extent certain pockets of commodity, which are also likely to participate. The only one thing that we have to obviously keep watching is how do earnings hold up? I mean, there is an expectation of this 15-odd%. Our market is centered around that expectation by and large, and we need to keep a watch on whether we don't have any significant detractors from that number. So that's the one anchor, and then we just keep looking around for opportunities. But at an aggregate level, keep a balance in the portfolio. There are certain pockets which are overextended, but there are also value pockets in the other side of the market. So I think the next 1 year or so will be important to ensure that, I mean, how well you do in terms of maintaining a balance in the portfolio will decide how you perform.
Taher, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Pleasure.